That was an interesting March, to say the least. Let's see how that affects our numbers in our financial update. Hi, I'm Joseph.
And I'm Tasha with One Big Happy Life, and we help you find balance, build wealth, and live happy. Everything that you need to create the life that you want. And yes, even in the midst of a global pandemic.
Obviously, there's a lot going on right now, but we wanted to provide our regular financial update because we want everybody to keep checking on your finances and using your net worth to track your progress over time and, just really be aware of what's going on in the good times and the bad times.
Yes, because net worth and your finances, especially if you're investing in the stock market, they're going to fluctuate. But the thing to remember is that you are investing for the long term, okay? So let's go through these numbers and we'll chat about how we're thinking about the things that are happening in our finances during this global crisis. And so that will help you work through your own finances. And if you don't have a net worth tracking spreadsheet, you can go to onebighappylife.com/net worth and get ours for free.
And of course, the way that this works, calculating your net worth, you have your assets and you subtract all of your liabilities or your debts, and then that gives you your net equity or your net worth at the end. And so we go through all of these things, starting with our debts, and then we talk about our assets, and then we do the calculations at the end.
All right, so starting with our debts. So this is our debt slide, and it includes all of our debts except for one. That'll be in the next slide. So that's a car loan for our daughter's car, our daughter Alexis's car. So we have that. A 401k loan, my student loans, and our mortgage. And you can see the prior balance and the current balance. And we are slow paying all of our debts, meaning that we just pay the minimum payment every single month. And so we've paid a total of $1,900 in principal on our debts this month. So the total debt that we've paid off year to date is $23,300.
The only debt that gets its own slide is my student loans. And the reason is we expect my loans to be discharged after doing 10 years of public service work using the Public Service Loan Forgiveness Program. And so we just track the balance and then the number of payments that we have remaining. And it is about 20, depending on the count of what they say. But we're really excited that we're so close.
And the other thing is if you may know right now that student loan payments are deferred for 6 months. And so with Joseph, we are taking advantage of that deferral and the 0% interest because every single month will still count for him, even though we're not putting any money towards his loans. With my loans, because we are actually paying my loans and we have to pay those off, we're not going to stop making payments on them. We're going to keep making our normal payments, and that will help the loan balance go down a lot faster while the interest rate is at 0.
Yeah, because those interest rates are really above market rate because they're arbitrarily set and not dependent on the market forces. So they're a lot higher. That'll save us a lot of money.
Mm-hmm. All right, so this is our total debt slide, just so that you can see everything, because even though we pulled Joseph's student loans out separately on its own slide, it still counts towards our total debt load. So our total debts add up to $884,500.
All right, now let's talk about some assets. You can see we have our asset slide listing all of our major assets. We're not going to go through the little tiny stuff like our clothes or something like that. We've got the prior value from the previous month and the current value, and then also the change down at the bottom. And you can see the change was negative because of our investments and savings, because obviously the stock market took a bit of a hit if you've been watching the news, and that really affected us. It's gone down $85,400.
And we'll talk more about this massive drop, because that's an $85,000 drop in a single month, and how we're coping with it and what our thoughts are on it after we get through all of the other slides. So next up, this is our net equity slide. So this is where we show the calculations for getting your net worth, because like Joseph mentioned earlier, your net worth is assets minus debts. And so here you can see all of our assets, our major assets listed out, and any associated debts that they have attached to them. So our house, for example, is worth $630,000, but it has a $506,000 mortgage against it, which means that the net equity is actually $124,000. So then we go down through each one of our assets, and some assets don't have debts associated with them, and some debts don't have assets associated with them. Like our student loans, they don't have an asset associated with
I
them.
like to think of myself
Yes,
as an asset.
we are the assets. But the thing is, there's no selling us to get to pay our student loans. So what this shows is how we get to that net equity amount of a net worth amount of $160,900.
And just as a reminder, even if an asset has a debt attached to it, that's still an asset. That still has a value. So your home is an asset. Your cars, even though they're depreciating, they're assets because they do have value. They might not make good investments, so you might not expect them to appreciate, but they are still assets, even if you owe some money on them.
Okay, and so then this is our net worth summary slide. So this is where we're putting everything together and showing you what our total debts were and total assets last month and this month and the total change. So you can see that our net worth has decreased $83,500 since last month because of the stock market. And it's kind of insane, right? Because that's a big number, right?
Yeah. So of course that is a really big drop, but it's exciting that our net worth is still positive.
And still in the six figures. So, let's hope, we're hoping, of course, the stock market doesn't continue to plummet and we don't have another almost six-figure loss month, but our net worth is at $160,900. Now, we have one more slide, which is I made this slide last month and we forgot it was there when we were going through the slides. And so we didn't do it last month. So we're doing it this month for the first time ever. We are including the value of our business in our net worth. So our business is One Big Happy Life. And we were taking our time and deciding how we wanted to add it to our net worth because we wanted to be really conservative with it. So we've valued our business at 1 times revenue based on last year's revenue. So adding our personal net worth to the value of our business, which is $280,000, which is the revenue that our business had last year, our total net worth is $440,900.
Yeah, so that's really exciting. And that is a conservative estimate for the business value. But I think, that's kind of how we are. We're not super aggressive. We don't want to inflate the numbers. So I think that's pretty fair.
Yep. Even though our net worth has dropped a lot in the past month, I am still beyond thrilled with the financial progress that we're making. And, we know, you guys should know that what is happening right now is just entirely temporary. And for those of us that are 10, 20, 30 years out from retirement, this is just going to be a hiccup. And by the way, there will be more hiccups. They're going to look different, but this is going to happen. This is just life.
Yeah. And so while it's important to recognize that this is temporary, there are also still some opportunities that you should be looking for, even when times seem like they're otherwise bad. Different things happen, like, well, if you needed to buy gas, it's cheaper.
Ooh.
But also interest rates are a little bit lower. So we started thinking, well, can we do anything that would save us some money? And sure enough, Tasha was able to find a deal on refinancing Alexis's car. So we pay a little bit less interest.
Yeah, and our interest rate was already low. Our interest rates on everything is very low. So our car interest rate was at 2.9% basically, and now it's at 2.19%. So we refinanced with the same number of months left on the loan. So we had 48 months left. It's a 48-month loan, which is the new loan is, and it's going to save us $300 over the life of the loan. Nothing to write home about, but it's an extra $300 that I can spend on like Starbucks, lashes, but it didn't cost us anything to refinance. And so why not? So that's something that you can definitely look into.
And we wanted to go ahead and address investments again, because clearly that's that's a huge factor in people's retirements, their lives, and it's just in the news exactly how much it has dropped. And the drop is very, very significant. So, but we didn't want people to get too scared about it, because if you're investing for the long term, you got to remember that until you sell your stocks and sell your mutual funds and ETFs, sell whatever you have in your retirement accounts, you are not taking that loss. You still own the same number of shares. Yes, the value of those shares has changed, but if you still stick with it over the longer term, then the value of your account right now doesn't matter at all.
Mm-hmm.
What matters is that you have those shares, that you're invested, so that when there are those up days, which there were several ups and downs over the past few months,
Mm-hmm.
huge swings.
Yeah.
And so if you were trying to time the market and you got it wrong, you'd be down way more now
Mm-hmm.
and than just riding it out. And so it's important to remember that.
Yeah. So while we are not, as of right now, going to be changing anything about our investment strategy, we're still investing in the market right now, new money, new investments, because you want to take advantage of these lows, and we're not liquidating anything because that would lock in the losses. We wanted to go ahead and just crunch the numbers so that you guys could see what we would do if we thought that this was something that the market may not recover from quickly. Which is, we looked into, okay, how much would we need to increase our savings to put us back on track to hit what we're currently on track to hit 14 million at retirement. So what would we need to do to get right back there? And so the answer is we would have to bump up our savings by $150 a month for just 5 years. So for the next 5 years, bump it up 150, and then we're back on track. So the point is to say that it's so important to have a financial plan, to understand where your numbers are coming from, and to be able to crunch your numbers, which of course we teach inside of Wealth Builders Academy. So if you have not joined yet, you should head on over to onebighappylife.com/wealth to get on the wait list so that you'll know when the doors open in another couple of months.
Yeah, so definitely, take this market and take what's going on right now with a grain of salt, and look forward towards the future. And it's important, as you're doing these, net worth checks, that you ask yourself these questions. And so that's why we want you to get in the habit of doing them and learning how to do them. So, if you aren't already, definitely do your net worth updates and check it out as you're progressing.
All right, we'll see you guys in the next video. Bye.
Bye.